Representative Ortitay.
Thank you, Mr. Chairman. As probably the person who's been out of college the least, homework doesn't bother me quite as much, so I appreciate that.
Go for it.
Now, we've talked a lot about broadening the sales tax. I'll be more pointed with my questions than any three of you, or all three of you are more than welcome to answer, but if we were to tax all goods and services, what would we be able to lower the rate to, if you have any general guesses or estimates?
Well, what are you going to do about business? You going to get rid of the 35% cascading or not? Because if you
Now wait, now he asked the question.
You can answer it with both. How about that? With or without, you can answer both, and we can see where that goes. Because we've had several, I guess, proposals that lower the rate to, what, 2%? From where it's at now, and you tax all goods and services. I don't think
Yeah, but I think that would cascade if I had to make a guess. I would look at the tax expenditure table, and that's going to give you a start. But then you got to find the 35%.
Representative, if you were to accept the business inputs that are currently in the code, but expand to not include any further, include all other final consumer transactions, but not expand, you could probably get in the ballpark of, on a first order approximation, 2 or 2.5%. If you were to eliminate those business inputs while you were doing so that you had what economists would want as an ideal sales tax, you would probably be somewhere in the low 3s. These are first order approximations, just based on the fact that most states that exclude services are excluding more than half of their base. 2/3 of our economy is now services, and Pennsylvania taxes only a small sliver of those. So somewhere between 2 and 3% is the right answer. And if you're doing all business inputs out, probably closer to 3, keeping some in closer to 2.
If I might add, my estimate would be a lot more conservative, maybe 4%, I would say, for the wide tax base on consumption. And the reason I'm saying that is because I think we should look at Hawaii as a realistic model. They have their tax rate in the low 4%, and they do tax quite a lot of goods and maybe some services, I believe. So I think it's a reasonable approximation.
Yeah, they wouldn't be everything, but they'd be as close as you can get.
Okay, and that's good. That's what I was looking for, because if you did just uniform across the board, or if you did it uniform across the board, some would see a tax decrease, some would see a tax increase, obviously. And when in this line of work, usually make half the people happy and half the people upset, no matter what you do anyway. So I just wanted to try to get some sort of a number on that. The other part I wanted to ask about was transparency. That was one of the issues that you had discussed, and we have quite large. I'll call it the shadow budget, which can be upwards of $50 billion, whether it's in special funds.
Well, yeah, that's my graph.
Exactly. Yeah. Do you think it would be beneficial for us to bring that back in line with our annual budgets and put it back in the general fund every year?
Yeah, it would, because you don't know what you're dealing with. You're not seeing the trade-offs, and basically you're kiting checks. I mean, that's between the funds. That's what's going on. And if you want to control your future more systematically, you've got to see the overall financial picture. That's why the private sector uses consolidated accounting, right? Yeah. But this would be such a cold water shock that you've got to phase it in. And you've got to get agreement. And frankly, I think looking at those numbers will bring you much closer together politically, because it's such a change. People from various parts of the states and so forth. Yeah. But I think, but don't forget, you got to do that for the locals. You got to be GAAP audited, and they've got to be GAAP audited, and they're not. And that's, that will change the politics in Pennsylvania constructively, I think. But it's going to change the politics. It has to, because I'll tell you a funny story. I'm up in Minnesota talking to the state budget director, and I give him an example from Allegheny County. And in Allegheny County, we had a guy who was a county judge who was doing bond counsel out of his law office, and it was not a conflict of interest. Okay, the guy in Minnesota burst out laughing. He said, if I did that, I'd go to jail. So we're talking about transparency. We're also talking about what's reasonable practice in the division between the public and the private sector, and how do our citizens understand and know what's going on so they have confidence. You want to see something funny, go to Pittsburgh and look at the streets. okay? The city's in an uproar because the snow is on the streets. It's been on the streets in the winter forever because no mayor has had the guts to face up to it. And what I'm talking about in terms of looking at things on a consolidated basis for state and local purposes is just to change the way you do government. But I think you'll wind up making easier and better decisions, but getting there will not. You can't do it in 1 year.
And that's what I wanted to get to is you had mentioned that we have some really tough decisions to make, and I don't doubt that we do, but doing something like this may certainly make him a little more palatable.
Well, then everybody's got to agree. The present value of your liabilities are on the balance sheet. You can see it, and say, no, wait a second. We've got this pension problem, and the locals, you start looking at them and you say, okay, well, we're going to try to address this by looking at our consolidated financial position, and we're going to try to do it in a business-like way. We're not going to try to do it in 1 year. And you would be surprised what the rest of the country is going to think of you. You'll get A+, and it'll be a better place to do business.
Hey, I like A+. I have one more question, and if the chairman will indulge me, about tax credits. Earlier today, I was reading that both Pittsburgh and Philly are in the final 20 to get an Amazon headquarters here, and I'm sure Apple won't be far behind in putting their bids out. Overall, when we talk about tax credits and tax incentives, do they actually benefit the state from a revenue, I guess, a plus revenue standpoint compared to the amount of money that we actually give them in incentives to come here? Because when you factor in the thousands of jobs that they bring here, are we going to collect enough in PIT and sales tax and the other taxes that we collect? Because I think that we already have $100+ million in tax credits right now, and I'm not sure what both Philly and Pittsburgh offered, but I'm sure it was something substantial.
Representative through the chair, the qualified answer would be generally no. Generally speaking, the best economic development incentive you can have is low and neutral tax rates that aren't picking winners and losers. This isn't to say that sometimes an economic development package may not bring in a company that turns out to do great things for a state, but the problem is you get one of those white whales occasionally. Usually you're ending up subsidizing things that either already would have happened or at a cost of missing other opportunities because your rates on other businesses were too high. We look at states like North Carolina. I think it's a good example because they did tax reform and they did a lot of things that some of you may like, some of you may dislike. But the one thing that I think there was strong agreement on, their old code was based on pretty high rates with huge exemptions for targeted industries that at one time were their growth industries, textile manufacturing and tobacco. If you were in those industries, you paid almost no taxes. If you were in anything else, you paid pretty high taxes. Well, that hasn't been their economy for a while, and it's certainly not their future. And they've got the research triangle, they have everything else, and they were taxing it way too high. So trying to equalize those rates, not having new targeted incentives for the new businesses, but having more equitable rates, I think has been very beneficial to them. You look at Pittsburgh and the tech clustering that is already going on there. I mean, Google has a significant facility there. CMU's there attracting a lot of activity. Would bringing Amazon in be a great thing for the Commonwealth? I mean, no doubt. But every time you go after one of these white whales, you spend a lot of time, resources, money. There are other things you could be doing with that, and most of them probably lose money.
I can give you examples.
Please.
Okay, I live in anybody here from Westmoreland County? Okay, well, then you know the story of the VW plant. Okay, we put in a couple $100 million, and there was local money. And all the present value calculations ahead of time were that it would be a revenue raiser, a job creator. But VW left, it was empty, and to fill it up, more subsidies have had to be provided. So the net economic effect of that, compared to what we might have otherwise done with the money, has been negative. Okay? You agree? Nobody's mentioned the quality of public service competition, okay? And that's something that as you start to do your homework, you start to think about. If we're really good in a particular area of K through 12, STEM education, vocational education, I challenge you to go look at what Kasich did in Ohio. That's what turned around that economy. Not only lower taxes, but vocational education works. And so there has to be a value proposition when you're extracting taxes from people and companies. What are they getting in return? Okay? There are potholes on the Pennsylvania Turnpike. I drove it last night.
I drove it this morning. And I'd like to add that I completely agree. I think I'm very skeptical as well of the targeted tax incentives. It's just a very politically charged game most of the time. May I add one more comment? I'd like to respond to Representative Keller's question about government spending and its impact on state economic growth. In one of my studies for the Mercatus Center, I actually estimated the effect of raising the average tax rate across the nation at the state level, and I found that a 1% increase in the average tax burden leads to a 2 percentage point decrease in state economic growth, which suggests, because of the balanced budget requirements, that the average level of government spending across the nation is relatively high, and it's stifling economic growth.
And I'll just finish up on the tax credits. When we look at this and we see the aggressiveness that goes after an Amazon, a multi-billion-dollar company, I think Jeff Bezos is now the richest man in the history of the world at $105 billion that he's worth now. Yet on the opposite side of that, we're looking at taxing energy in this. We're giving $1 billion industry tax credits and tax breaks, but we're trying to tax another industry. So the idea of picking winners and losers never seems like a good idea. So I'll close with that. Thank you, Mr. Chairman.